Are you confused by interest rates? Hey, I get it. I see interest rates all over the place, and then we're hearing about the Fed not dropping rates and what's going on. Well, I wanted to give you an update here at the end of February, and we're going to have another report tomorrow. But what is going on with interest rates, and why did they spike up a couple of weeks ago, and now they've actually settled down to the point that they're the lowest that they've been in just over 2 months? Well, there's a lot of different reasons. One of them is the jobs report came in lower than expected. About 143,000 jobs were created when there was an anticipation of about 175,000. Additionally, retail sales softened, and they softened to the lowest point in almost 2 years. So that was a big concern, and that shows kind of a future economic path that is saying that consumers are tightening up their wallets and we should see inflation slow as a result of that. Overall consumer confidence is also down. So what happens when that occurs? Well, they bring rates down so that people will feel a little more confident in buying and making those major purchases, one of them being homes and shelter. Ultimately, we are seeing everything go down. The good news for that is, well, payments could be lower. The slightly bad news is the lower we go, the more competition that occurs in the market. For every 1 percentage point that we go down, it qualifies an additional 5 million buyers. Now, it doesn't mean that all 5 million on a national basis are going to go out and start buying. However, a large cross-section of those will. With the low inventory that we still have, even though it's a lot more than it was a couple of years ago, we're still a lot lower than we were in our normal years of 16, 17, 18, and 19. So we do have that risk going on when it comes to competition. We lower rates, we're going to see more competition. One other element that is important to know is that our rates have something priced in that's a little bit artificial, and that's something called prepayment risk. This is something that people don't talk about a lot, but prepayment risk is when lenders spend a lot of money to originate that loan, and they start collecting, and only a few months later, rates really drop, and there's a bunch of people that refinance. Now, in that case, that lender, that investor, didn't have enough time to earn enough interest with the servicing costs, the originating fees, and what have you, to actually make that loan profitable. So what's happening is the consumer then refinances, that person, that lender, that investor loses that loan, and maybe it costs them $5,000 to create that loan, and they've only collected $4,000 back. Well, now they're at a loss of $1,000, and you can imagine that is not a sustainable business model for anybody. So what ends up happening is they price that loan a little bit higher with that risk factor baked into that loan. Now, as rates get lower, there's less need for that risk factor. Why? Well, if rates, let's say, were at 4.5% right now, in order to refinance, you'd want a rate at 3.75%, and the likelihood of it dropping to that is a lot lower than the likelihood of the rates dropping, let's say, from the 6.79% national average that they are right now down to 6%. That's a very likely scenario, and therefore that risk has to be priced in. So as rates get lower, they get lower in a non-relative manner. As it gets to 6, they have a little bit less of that risk. So maybe 6 actually results to you as a 5.875 or a 5.75. As they get down to 5, well, they need to price in less of that. So maybe it drops even an extra quarter of a point as they get down to 4, so on and so forth. So you could see the lower rates are, the more of a natural par rate instead of pricing in that prepayment risk into it. So this is an update on where interest rates are, why it seems very confusing that when certain rates stay the same, others go down. When certain rates go up, others go down. When certain rates go down, others can sometimes go up. So there are a lot of things that are in play here. If you have any questions about rates, how they work, any real estate questions about buying or selling, or know anybody that might have questions, please DM me or give me a call at the number below. I would love to help you out and be your resource for all questions having to do with real estate and the way rates are affected in the real estate world here. See you next time.